The dollar index continued its bull run last week again, achieving the highs of this in which it was trading since long, and at the same time in the last two trading sessions after dropping sharply have seen a good recovery towards the end, closing at 105.8. Now what to expect in the month of October? Is it again going to continue with this rally here, or we can see a possible retracement? Which position you should take such that we can profit, we will see with the help of charts followed with indicators. As you can see, indicators do provide a clear picture. You can see this moving averages are trading with divergence and 20 period moving average giving it a very good support so far. Stochastic has dropped here. The MACD is still trading at a higher level, so little bit of cooling can be seen, while RSI was overbought, and that is why we can see a little drop here. More of such detail we will see with the help of this analysis. Towards the end, I will give you the summary of the analysis along with the trading levels and strategy to profit. Do watch till the end. Let's start. First, see the DXY is trading in this bullish channel since long now. And if you look at the complete formation, the highs, the lows, the highs, the lows, the highs, the lows. So it is beautifully keeping itself within the zone. Last week again, it has touched the high at around 106.5 before retracing and closing at around 105.8 levels. Now, if you look at the bottom of this channel for next week is at around 105.5, which is a very good support at 105. These two are going to remain a crucial support for the DXY, breaking below which you can say that bearishness may prevail here in the dollar index. However, at the same time, looking at the previous pullback towards the end of the session suggests that it can resume its upward journey, may consolidate here in this zone for a while before looking forward to another breakout. Any move above 106.5 should be treated with a caution, because beyond that certainly more bullishness is going to prevail. I will look forward to the highs at around 108 and 110 in the month of October. If it continues to stay above 106.5, certainly the bullishness is going to prevail. We may look 108, 110 levels, and in my previous analysis also we have touched this point that these levels are achievable. Now, why we are saying that these levels can get achieved, look at the daily charts. I will show you on the weekly charts as well. See, it stayed here in this bearish zone for a while, and at this point we have mentioned that it is giving a breakout, and certainly it may aspire to achieve the top of this. Now, top of this channel and the crossroads you can see is at around 109 levels here, and as the time passes by we can see this zone completely 108, 110 is going to remain the most critical resistance for the dollar index in the near term, and hence you should be watchful of this. Now, if you look at the weekly charts, let's move towards the week. First of all, let's have a look at the DXY movement in the long run. It is just staying in this two lines, or this is a trend which is with a bullish bias. Now, what has happened here? The rise, the retracement, and now again starting to look upwards. It should not be still treated as a complete reversal, or we should not confirm that it is aspiring to achieve the all-time high levels as long as it stays below 110 levels. Remember, 110 is the level beyond which you can certainly say that it is going to hit at least double top, or it is going to hit the all-time high levels again. So this is one position where one has to be watchful, cautious. And this makes 110, 108 as a great resistance on the upside, even if it continues to stay bullish here. Second observation, see, if you look at the last week's candle, you can see beautifully, first of all, higher lows are seen. Then suddenly this breakout has been seen here, because previous preceding three candles you can see body size was diminishing, and this candle has suddenly given a breakout. Now, if you look at this candle also, you can see that the body size is greater than half of the complete move, leaving a wick on the upside, and hence once it stays above 106, certainly you can expect that we may see further bullishness here. Yes, it can yield further bullish candles, taking it towards 107, 108 levels before retracing. Yes, there is a possibility to it. At the same time, one must not forget that it is staying in this channel and it has achieved the top of the channel. At the same time, you can see this is 11th straight greener candle here. It does not mean that it cannot continue further, but yes, this has bought some of the indicators to the overbought zone. 11th straight bullish candle suggests that there should be a pullback. At the same time, what it may try to do, see, if the October month it has to stay bullish, it can try to aspire the highs before retracing a little for a couple of weeks, and then towards the end of the month achieve the further highs. That is one probability which one can look into. At the same time, as long as it stays above 104 levels, we should not be treating the DXY as bearish. Remember this fact, as long as it stays above 104, we should not be treating 100 DXY as bearish. At the next support levels are also seen very nearby at around 100. 3.5, 102.8 zone. This is going to be the next stronger support zone here, where we may find greater support for the DXY. And hence, we should be watchful of these levels. Only below 104 further bearishness may prevail. As long as 104 is respected, we should not be treating this as bearish. Yes, it is aspiring to achieve the top of this channel, sitting at around 108, 110. Now let's have a look at the monthly. Now remember, on the monthly charts, the DXY was staying bearish, the dollar was staying bearish in this channel, and this month it has shown a breakout. This is a breakout candle instead, and if you look at the resistances at 105.4, 105.5 was a greater resistance. It has breached the resistance also, suggests that there is a stronger bullish momentum which is going to prevail. Remember, after staying bearish, after consolidating for a while, for almost a year or so, you can say this is the first breakout candle, and hence there could be a second bullish candle which will follow up from here. This could be in fact even similar size of candle which can take it till towards 108, 110. Yes, it is still looking upwards. First candle, second candle might follow here. We have to be watchful. We have to be alert, because the preceding two candles, preceding weekly charts, have shown extreme bullishness, and hence it may try to achieve the highs in a hurry before looking forward to any downside. So yes, the probability is high that it can aspire to achieve a further bigger candles towards 108, 110, and in fact beyond levels. Now let's have a look with the help of indicators on the monthly chart. The prices diverge from the 20 months average. It has converged here towards the 20, and in fact one candle achieved the 50 months average as well. Moving averages are still stacked beautifully and are still in the bullish zone. It has taken the support and now looking upwards, so possibility for it to rise exists, and hence more bullishness can prevail in the coming couple of months. Now also one must look at the stochastic, which has gone to oversold, has shown a V-shaped recovery here. It may enter into overbought zone, stay there for a while before dropping. Look at MACD. Now if you look at MACD, see, this is the only case which is still suggestive of prevailing bearishness, or which still suggests that there could be a pullback. Now if you look at this, sharp rise was seen here, extreme bullish momentum was seen, and then it has crossed over on a sell side at the very high levels. Since then it was trading with divergence, trading with bearishness. Now even if you look at the convergence here, it has just started to converge, it has not yet crossed over. This also is suggestive because the divergence was more. This month again, possibly we may see a greener candle which may help it to converge a bit further, but not crossover, or in fact crossover but then not achieve the highs. That is what we can look forward to. But in fact, if it crosses over, then certainly for few months we can see it achieving the double top levels before crashing sharply. But right now it is still staying bullish. Right now we can possibly expect it to converge more and yield a bullish momentum, because see, on the downside the space is still lot much of ground to cover on the downside for the DXY, and hence see, it can achieve the highs here before looking forward to the down move. That is what we can look forward to. RSI is also looking upwards, staying bullish. Coming to the weekly, on the weekly charts, after long, now 20 and 50 period moving averages have crossed over. See, the 100 weeks average is sitting at 102, which is definitely a great support, and now the 20 and 50 period at around 103, 103.5 is going to be the most important support levels here. And now moving averages are looking upwards. This is certainly a bullish sign which is going to prevail. Now, only concern point is the stochastic, which has been trading overbought since long now. This is the only point which calls for a possible bearish move here, but it does not mean that it cannot sustain the overbought levels for a couple of weeks. Hence, it can in fact achieve the highs before looking forward to a pullback. That is one of the probabilities. If you look at MACD, see MACD after sitting at bottom here, it has also crossed over and trading with divergence. This also increases the chance that it can continue on the upside for a while, because see, this was the sharp slump. It has stayed there at the bottom for a while and now looking upwards, and hence it may continue further on the upside for next few weeks from here. But at the same time, one must look at the candle size has started to flatten. The divergence, though, is still there and still suggestive of bullishness as of now. So we should be still watchful, careful. There is a potential rise which can be expected. However, it is not a sustainable rise and there should be a drop sooner or later. But before that, my only worry point is before looking forward to a drop, it may scale up to the highs at around 108, 110, which is definitely going to remain a greater resistance. RSI is rising too, showing signs of bullish. Coming to daily charts, on the daily charts, moving averages have crossed over here, traded with divergence. The price every time has got the support from the 20 period moving average, and if you look at the 20 period moving average, which is right now sitting at around 105, which is going to remain a very good support, and this is also the bottom of this bullish channel. Now all the moving averages are paced beautifully and are suggesting extreme bullish momentum which might continue. And remember, once it falls below the 20 period, then chances for it to break towards the 50 period moving average will be high towards 104 levels, which is going to be the next major support. RSI looking vertically down, and there is a chance that it can stay for or look downwards for a near term, maybe few sessions. Now look at MACD. MACD here has achieved the highs. You can see this is almost the levels where we have seen MACD or dollar index reversing from these levels, but it does not mean that it cannot scale to the next highs. See, this is at plus 50 levels. We have seen the triple top here at plus 100 as well, so it can resume towards those levels as well. Right now, if you look closely, it is trading with little divergence and bullishness, and it can still continue on the upside. RSI on the daily charts was overbought. It has cooled down a bit. It has come to the normal levels, but it is still very much overbought. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels, strategy, and the summary of the observations so that you can trade profitably next week and the month of October. And before we proceed, if you want to learn this art of trading, you should join my mentorship batch. 26 batch is going to start on 9th of October. Limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Remember one fact, there is only one investment which can reap the profits to you for lifetime, that is learning. And these learning with the practice definitely can help you reap out the benefits throughout your life. So reach out to me for more details on the mentorship batch. Also, you can be part of my signals channel. At the same time, join my free Telegram channel to get the live market updates. And yes, do not forget to like, share, subscribe, and comment. Your every like, share, subscribe, comment is a great motivation, inspiration for me to deliver daily analysis on major global markets and commodities. With that, let's start. Now, see, on next week, first, where to buy? I will recommend you to buy here at 106 levels. Beyond 106, certainly one can expect that we may see further bullishness prevailing, where one can look forward to 106.5 levels, and in fact it can try to aspire to achieve 107. Now see, if it stays above 106.5, certainly you can say that the bullishness is going to prevail there. It may continue to move on the upside, where 106.5 first milestone, and then beyond that, actually 108, 110 zone is where it will aspire to achieve. However, there are little resistances on the nearby levels at 107.45, 108.1. Now this is the first milestone which is going to be a greater resistance which you should be watchful of, and then 109 levels. Now beyond 108 point, there is a nearby resistance at around 108.3 and 108.6 zone. This is the zone where we may find little resistance, as 109 levels will be seen, and ultimately I will look forward to 110. That is the large term or near term target for us. Even if it scales on the upside towards 108, 108.6 levels, remember the higher it goes, the more chance for it to break again on the downside will prevail. Hence, possibility for it to scale on the upside in this week exists, or in fact it can stretch the rise for a couple of weeks scaling towards 110. But ultimately, the if you see it is scaling for the first 2 weeks, remember the later half of the week or half of the month, that is the last 2 weeks, should get a pullback. Else, it may achieve the highs this week, scale up, then show a pullback for next 2 weeks, and in the last week again show a rise. This is also one of the probabilities which may happen. But ultimately, it appears that it is going to remain a bullish week. On the downside now, bullish month as I mean. On the downside, you can sell here at 105.6, but then 105.3 and 105. Now 105 is the first milestone. Below 105, there will be further bearishness. However, 104.6 and 104. Now 104 is the next milestone which we are looking at. These are two critical levels for the DXY on the downside. You have to note this. These are two critical levels for the DXY on the downside. And if it stays below 104, certainly one can say that it is cracking, it is crashing, and then we may look forward to 103.6, 103.2, 103, 102.4 and 102. Now I do not see it breaking below 102 any point of time soon. It is difficult for it, but these are markets. See if it can rise consistently. It can drop also in the single go. Though the chances appear to be less, I will still expect it to rise and achieve higher highs before retracing. So what it may try to do, it can try to scale up towards 107, 108, or even 110 zone somewhere here, then retrace a little towards 106, 107 zone in the next couple of weeks, and then towards the end of the month we may see a rise towards 110 again. So this is one probability which I will be looking forward to. You have to stay cautious. You have to stay watchful. Just stick to the levels. Any move below 105, you can say the bears might enter at around 105 levels, can pull the prices on the further downside. Below 104, you can say 50% bullish, 50% bearish. You can say below 104, certainly the bears will be more heavy, and hence you have to remain cautious of these levels. Any drop below 104, further bearish attack can be seen, and then we may see it prevailing. As in how it drops further on the downside, the bears will capture the complete move, and then a sharper drop can be seen here. Hence, do not think that if it is appears to be bullish as of now, it is going to remain bullish throughout. It can show you a pullback, very strong pullback, because we have seen 11 straight greener candles, so there could be further red candles as well. So take your positions accordingly, trade with a stop loss. Do like, share, subscribe and comment. Join my mentorship batch and Signals channel. Reach out to me for any of your trading or training queries. Thank you very much. Have a great profitable trading week ahead and a trading profitable month ahead. Thank you.